This video is sponsored by Mark 7 Car Wash Equipment, providing clean, dry, shiny cars for over 50 years. Visit mark7.net for more information.
Hello and welcome to Unscripted, the video series that connects you with market leaders. Today on our Unscripted video, we welcome Jeff Lefko, Executive Vice President of Hanley Investment Group. Hello, Jeff, and thank you for joining us here today.
Hey, Rich. Thanks for having me.
Sure thing. So today's topic is on the real estate held by car wash operators. And Jeff, I know in the real estate industry there are a lot of terms that are commonly thrown around, and car wash operators are at varying degrees of understanding some of these real estate terms. So one of the common terms that we see associated with real estate is cap rates. So can you please briefly describe what cap rates are? And then as a follow-up, can you please discuss some of the cap rates that you have been seeing over the past 12 to 24 months?
Yep, absolutely. So in the real estate world, we use cap rates as essentially a measure of risk and a measure of value on a property. Just like in the car wash world, everybody speaks in multiples. The cap rate is essentially just the multiple. It's the reverse of the multiple. So we generally speak in cap rates, and it's a measure of the value of the property. And what we're seeing with cap rates recently is that they're compressing. And so when a cap rate compresses, it actually means that the value goes up. And so we're seeing some major compression in the car wash space. We've been really active in selling real estate off for a lot of different operators in the car wash industry over the last 3 years. And I would tell you that this year has been a record for the compression of cap rates. We're seeing a lot of different drivers this year that's causing this cap rate compression. And I think I wanted to just discuss a couple of those items with you because they're really relevant to today's economy and today's world. And the first one is that a lot of the private investors that are buying this real estate have figured out the benefit of the car wash depreciation. And this was something that it took some time for that private investor mentality to be able to come in and realize that these car washes offer a really big depreciation benefit, especially if someone has already sold a business and they need something to be able to offset some of their taxes. These car washes offer a really good opportunity. So we've seen a mad rush in 2020 at the end of the year. Everyone is trying to get that depreciation benefit and they're moving their money into car washes. The other thing that's really driving this is that historically, the investors that are buying car washes now, the real estate leased to car washes, they were pursuing other net leased investments. So they were targeting Starbucks, CVS's, quick service restaurants. And what we've seen during this COVID economy and this environment that we're in is that some of these traditional operators haven't performed as well as everybody thought they would do. Where on the contrary, a lot of these car washes have performed really well. Most of the express car washes are completely touchless. In many cases, somebody can go through the car wash with their membership and really have no interactions with people and can feel safe about doing it. And it's really led to a lot of these car wash operators having pretty consistent years. And so it's a major selling point to a buyer that wants a consistent asset that's going to continue to perform well in both tough economies and growing economies. The other interesting thing is just that there's a huge lack of supply of net leased product right now. So your Starbucks, your quick service restaurants, the CVS's that I mentioned, other auto repair and auto related tenants, there's a big lack of supply. We're at probably an all-time low of supply in the net lease market. And a big chunk of these buyers that are pursuing net lease assets are 1031 exchange buyers. They're under the clock. They've got to find an investment and they've got to find a place for their money. And a car wash becomes a very viable option for them just because there's not a lot else to look for in this market where you can achieve a 6% return or a low to mid 6% cap rate. So it's been a very viable option. And because of all that, we're seeing some really strong compression on the cap rate front, anywhere from 25 to 75 basis points. It's been something where in the past, the top tier operators like a Mr. Car Wash had really been, they've seen very consistently low cap rates. But what's happened this year is more of your mid-tier operators have seen cap rates that are catching up to the larger operators. So it's something significant. It's something to watch. And I think our prediction is that this cap rate compression could continue on in the foreseeable future. And we really don't see an end to it because of the reasons that I just mentioned.
Okay, very interesting. So obviously, Jeff, one of the or the traditional thinking for an investor looking at the car wash market is not only can it produce terrific margins when operated successfully, but also it's a real estate investment, and as you're operating that business, the thinking has been the land underneath your feet is kind of appreciating and gaining value over time. Now, one of the trends that we've been seeing recently, or more commonly in this industry, are different real estate strategies that operators are leveraging, such as sale leaseback agreements and things of that nature. So can you tell us what are the advantages of an operator selling off the operations real estate separate from operating the business, and why are so many car wash chains deciding to sell off their real estate these days?
That's a great question. And it's really twofold or even threefold. I would say that historically, a lot of the big private equity firms and the larger car wash groups have taken advantage of sale leaseback. They've done it for the ability to expand quickly, to be able to maximize value. And the smaller operators have done it also because it becomes a little bit of a different avenue instead of going the traditional bank route. But now more than ever, the reason why people are considering it is because these business values, so the value of the business without the real estate, have gone up to such high multiples that it just makes good business sense to be able to maximize on the real estate. What I mean by that is if we're selling off a net lease car wash, so just the real estate, to a private investor, and we're getting a 6% cap rate, that's about a 16 multiple on the real estate, on whatever rent that is that's plugged into that location. Where when you sell the business and the real estate together, maybe it's a 10, 11, 12 multiple, depending on the size and the type of operation. So you're always going to be getting a little bit more of a premium for the real estate. And then on top of that, what I mentioned earlier is that these business values have gone up so much without the real estate that we're seeing transactions for some of the larger groups when they sell their business off. They're getting such high multiples that we're really not seeing that spread between a business that's sold by itself and a business that's sold with the real estate. And as that spread declines, it becomes more and more beneficial for an operator to take advantage of a sale leaseback. Can't predict if this is going to continue on forever because these business values are just so, I don't want to say inflated, but they're definitely at an all-time high. But if this trend does continue, we're going to see more and more sale leasebacks in the future. And it's a good business practice to at least consider doing a sale leaseback.
Certainly something to monitor moving forward here for operators who are interested. How can they increase the value of their real estate, do you believe?
So there's a couple things that groups should be doing if they're considering selling their real estate, and a lot of them are pretty easy. I think you have to put yourself in the shoes of the person that's buying the real estate. And so there's typically two categories. You've got the REITs and the private investors, and we'll talk about that a little bit more. But I'm going to talk about the private investor mentality here. This is your mom and pop that's maybe sold a shopping center and they want to move their money into just a safe passive investment in the car wash space. So they go and they move their money into a deal, let's call it in Kansas City, and they buy a car wash asset. And what this investor typically has looked for has been, as I mentioned earlier, that the Starbucks, the CVSs of the world, they want a brand. They're not buying just a one-off car wash. They want to buy a brand behind it. So the easiest thing that a lot of operators can do is creating a regional or even a national brand, something that has a cohesive website, have universal branding throughout the entire chain, have very transparent financials. That's one thing that if you look at every single car wash deal that has sold this year, I would tell you that at least 75 to 80% have been very transparent with their financials. And what I mean by that is that's their unit levels and then their corporate financials. Of course, they're all obviously confidential and the buyer signed a confidentiality agreement, but being able to show a buyer, this is how profitable we are, this is how profitable this location is. When buyers see this and they see just how profitable an express car wash can be, they're blown away. because they're used to these other assets that don't have anywhere near the profit margin that a car wash chain has. I think having a good brand, having transparent financials, other things would be putting a healthy rent on the location. So we've seen in the past that some operators have put these gigantic rents on their real estate to really maximize value, but then it puts them in a difficult position in the future. And what I would say about that is buyers want to be under a certain price point, and they want to make sure that there's a good health ratio between your EBITDAR to rent. And the typical EBITDAR to rent ratio that we see is anywhere from 2.25 to 2.5. The groups that try to push that more in the 1.5 to 2 range, it starts to get a little bit scarier for the private investor and really for anybody that's buying the real estate. So keeping a healthy EBITDAR to rent ratio. And then the other thing that doesn't get talked about enough is price point. There's definitely a barrier that we're seeing as the real estate hits a certain price point. It's tough to get a buyer comfortable with the site because a buyer's going to look at the intrinsic value of the real estate if that operation goes away. So if you're dealing with a $2 to $4.5 million price point, it's a lot easier to justify that pricing versus something in the 5.5 to 7 million range. And so what you'll find is that there's really only been between 4 and 6 car washes, real estate leased to car washes that have sold above 5.8 million in the last 2 years. We've done 3 of those deals, and I would tell you there's just an infinitely larger buyer pool when you're in that 2.5 to 4.5 million range. That's the sweet spot for selling the real estate. I think another interesting stat is that this year to date, there's been about 77 car washes to sell. So 77 net lease car wash properties to sell. The majority of those were to private investors. Last year, the entire year, there was 42 car washes to sell, or car wash real estate. So we're seeing a major increase, and it just goes back to this increase in demand that we've talked about. So not only is the demand going up, and that's causing a decrease in cap rates, but there's just an overall a large amount of buyers that are looking into the space, and this trend should continue in the future.
Sounds good, and certainly good news for car wash operators and our industry as a whole. So, Jeff, my final question here is: you mentioned REITs, and I'd like to go into a little bit more about that. So, what is the value difference between a real estate investment trust, or as you mentioned, REITs, that buy car wash real estate, and private investors who purchase car wash real estate? And then, as a follow-up, how has that changed over this past year here?
It's an interesting question because whenever somebody is considering selling off their real estate, or whenever an operator is looking to sell off their real estate, they're always going to first talk to a REIT, and they're going to see the value that a REIT can bring, because the REITs offer ease of transaction. They offer simultaneous closes when there's a merger and acquisition being done. They're the easier option of going the private investor mentality or the real estate investment trust mentality. Most of the time, investor or sellers or car wash operators want to go with the REIT. However, if the operator's goal is to really maximize value and take some chips off the table and be able to know that they've got every last dollar out of that property, the private investor mentality is the way to go. There's typically, I would say historically, about a 50 to 75 basis point spread between where the REITs want to buy the real estate and where the private investor wants to buy the real estate. The private investor will typically pay more than the REITs. But what I would say is this year, that spread has widened. There still are REITs that are very interested in the car wash space, but it's not as prevalent as it was before COVID. We saw a little bit of a slowdown during COVID, where a lot of these car wash operators had to rely more on the private investors. The benefit of the REIT, as I mentioned, is that it's an ease of transaction. You know that if you go under contract with one of these REITs, there's a very high certainty of closing, and it can be done all at once. You don't have to sell the properties off individually, where the private investor has to be sold off individually. But the private investor they're going to pay you that premium. You're going to really be able to maximize value and get every last dollar out of it. And they're great for groups that are very well capitalized, that can afford to let's say it's a merger and an acquisition and it's a car wash chain that's buying another operation, they can afford to close on the transaction either with cash or with debt, and then be able to spin off each location individually over time. That's the best mentality or the best process for somebody that's really well capitalized, that has the time, and can go through the process to really maximize value. So both very good, viable options. But what we would see more this year is the private investor coming in and buying the real estate. REITs will always be there, and they're still there in the background for the larger acquisitions. But the private investor is becoming a lot more viable of an option. And what I would just end with is that the interesting thing that a lot of groups have experienced is that once a private investor has come in, and this could be a family office, it could be a mom and pop, it could be a big 1031 exchange buyer with 30 million to place. Once they come in and they get comfortable with a brand, we're seeing that these groups are repeat buyers. So they're buying one car wash maybe in 1 year, and then they're coming back and they're loving the operation. They're loving the rent check that they're getting every month that they can count on. They're liking the transparency and the fact that the car washes are doing so well during COVID, and they're coming back and buying more and more. This year, out of the 9 operators we've worked with, we've had repeat buyers probably on 7 of those 9. And I think that's just a good sign for the industry. It shows that this is a sustainable model. It shows that the investment community and the investment community that we work with really likes this and feels like it's a viable option. And I think it's just going to continue on in the future and ultimately drive these prices up and continue to decrease the cap rates.
All right, sounds great. Well, we thank you, Jeff, for taking a few moments here to do this interview for Carwash.com, and we appreciate your insight into the all these different dynamics that are occurring in the real estate market as it pertains to the car wash industry. So thank you again.
Of course. Thanks for having me on.